For those of you who've been clamoring for more volatility, well, down 60 handles off the open, up 100 from the low, this S&Ps, and then you break another 90 with 40 of it coming in the last 20 minutes, half hour. And now we're back up 50. Can we calm down today, hold the low, build a little base, and go up? Well, we got some good earnings reports to talk about. Not widely talked about stocks, but we'll get to Triple M. We'll get to BMY. We'll have Eric Kroll, 835. Keeping an eye on that sleepy IPO market. He has some insights on the small caps. It's the Friday. It's the end of the week. It's PCE at 8:30. It's pre-market prep.
Welcome to Benzinga's pre-market prep.
This is a volatile puppy here.
It's all about execution styles and strategies.
Okay, trading at the highs of the pre-market session, up 46.5 handles. Caught a bid right away. Yesterday's, I'm calling inside day. You heard it here first. We're up a couple pennies in the buck at 104.14. TLT trying to rebound, got a double top in there, up to 20 cents at 92. Boy, it's really jumping around. 8 o'clock prints. This is called flat here. Crude, that's down 33 cents at 77.95, trying to mount to rebound off yesterday's low. Gold shellacked yesterday, finds a double bottom up, 1840 at 2371.90. Silver under 28, going the opposite way, down 7 cents at 27.90. Bitcoin up a grand, down a grand. Well, up 2,800 today at 68,200. Triple D, boy, oh boy, oh boy, we wanted some volatility, and what I have to say, I'm going to go back to maybe COVID to have a day where we had that. I mean, if you add up all the ranges and all the chop, I mean, what do we have? Like a 300-400 point range if you count all the dips and the dives and the ducks and everything. What an incredibly volatile day.
Wow, boom, we go down, it feels like, crashing in the morning, and then they rally at 100 S&P handles, and then they basically give it all back. I mean, volatility, AB, bring him in as well, because it was a very volatile session. And here we are popping up again. We're up basically 50 handles this morning. So volatility, make volatility great again. I guess we are doing that. PCE is not going to slow us down here. I think, at 8:30, we're obviously going to get one of the most Fed-watched gauges on inflation here. So that's going to make us move as well. Keep an eye on your TLT. Keep an eye on your IWM at 8:30 because it's going to be moving too. But impressive volatility there. Good for trading. Like it for trading.
Yeah, you got a red shirt on, so I'm not too happy about that.
But yeah, I wore the red shirt, hoping the market goes down so I can buy more Tesla.
Okay. AB, how you doing? How you make volatility great again? That's a good one. All right,
with the red shirt on too. I'm good. Happy Friday, everybody. Always good. AB on a Friday. We made it to the end of the week. Yesterday,
yeah. Congratulations.
Like you guys said, very volatile day, roller coaster day. You open lower, you go in the green. When we open green, you move lower, you go back in the green before closing red. I mean, it was just, if you were trading,
crazy.
There was no conviction, it felt like, in the overall market yesterday. I mean, after Wednesday's price action, I think, like long only investors, people that are just bullish and hold, would take yesterday because you didn't have that really ugly follow through. A lot of times when you see a big sell off in the market, if like the next day you get up another down 1.5-2% day, like that's when it can start getting a little bit scary. But I think yesterday's price action, all in all, will take it, especially with this morning's, which again, we do have very big economic data coming in 25 minutes, the PCE. But as we go into that, we are trading higher. So we'll see if those inflation numbers come in, hotter or cooler than expected, because if it's hot and we go back down again, then maybe, maybe it starts getting a little bit more scary.
Yeah, they never give you a chance. Like, that sell off yesterday and near the end of the day, you think, hey, you know what? I'm gonna look at the close. I'm gonna lean on yesterday's low. What's the worst thing can happen? They open up 45.75. They go 2 ticks lower, and they never gave you a chance. Never saw unchanged, and now you're up 50 handles. So, and I asked Dennis and I were on in that last hour. I'm like,
Started
Dennis,
going up right after hours, and they just couldn't stop
immediately.
buying. They couldn't stop buying. This is the same thing the day before too. They started going up after hours, and they couldn't stop buying, and then obviously it turned over and rolled over overnight. But in the 4 to 8 session, the previous night too, I believe was the same thing, Joel. That's like the buy the dip algos coming at 4 o'clock, and they're like, oh yeah, we're coming in PCE. And maybe it is getting ahead of the inflation data because a lot of people expect it to not be hot. We don't know what it's going to be. Maybe it is going to be hot. Segal was just on CNBC. He thought it might be a little bit hot, actually. But in any regard, 8:30, we're going to have some major movement, especially in the IWM. But we got major movement in a couple of individual names here. And Dexcom is your loser of the day. When you miss earnings and guide down just even by a smidgen, they punish you. They take no prisoners. It is just an ugly mess at DXCM here this morning. AB details.
Sorry, let me get that pulled up real quick. I had a different stock pulled up.
Nope.
Well, Joel, why don't you get the technicals while I'm grabbing these?
Oh yeah, give the technicals. Down 38, 87, 68, 98. Boy, after my horrendous Ford call yesterday, I'm a little hesitant to say, well, you can't make money shorting something down $39, but
And they go lower.
yeah, it was lower. Pre-market low 66, 64. You're getting a little bit of a bounce. I mean, all right, I got a level. Oh, you know what? I like it here. I like it. Look,
You
I'm gonna
like
give it.
it?
I'm gonna give it.
Buying this? Are you going to buy Dexcom?
It's 67. Yeah. Yep. It's 67.
67. He's giving you a number, folks. You're gonna maybe see that today. It's 68.
And if you put this in your portfolio in 3 to 5 to 15 to 25 to 30 years,
I think you'll be up money.
You'll be up money.
That's what he's saying.
Yeah. Yeah.
Unless better technology comes out, and then they're done. Can't get better than Dexcom.
No, I'm stealing my
glucose monitor. I think my neighbor's got one. It seems like a lot of people who have diabetes obviously have one as well. So it's used. It's definitely a fantastic tool if you have diabetes. The thing is, though, it's like it's hot until it's not. And we've seen this has been the story of the last few years. And Dexcom, was a very hot thing in 18, 19, 20, going from 20 to 50 to 100 to 150. And now it's all the way back 5 years of gains. You're hot until you're not.
Okay, how bad?
That's my analysis.
Let me give you guys the numbers real quick. EPS of 43 cents. That beat by 4 cents. Revenue of $1 billion, missed by 40 million. So you had the mixed results there. But then the market was looking for 2024 revenue. The estimate was for $1.15 billion. Instead, they said $975 to $1 billion. So guided on the low end there. And then on the EPS, they said for fiscal year 2024 revenue, 4 to 4.05 billion versus 4.33 billion. Those first numbers I gave were for Q3. So either way, whether you look at it for the quarter or for the year, the revenue guidance was lower than what the market was expecting. Not by that much, though, for how big of a haircut this thing got. But either way, we know what happens when you give weak guidance in this market.
You cannot lower guidance even by a smidgen. They punish you severely. So, Chad's bringing up a good point. The U.S., North America, trying to get healthier. They're already pretty healthy over in Europe, from my understanding, because they eat better than us. But we like to eat big portions. I mean, now you get this, Zempic, all these weight loss drugs.
Not in CMG. That's why they hit it.
Is that going to help? But is the weight loss drugs going to help with the diabetes? Because we know there's a correlation between, obviously, overweight and diabetes. You could argue it, I guess. It's an anti-Ozempic play. I guess you could argue it. But I think regardless, just when you miss earnings, you stay out of favor, it seems like, for a long time, too. I don't see this just bouncing back. When you lose 39%, these things often continue to leak afterwards. Just not the market to be a hero and say, yep, this is it. I mean, we've learned the hard way in a lot of stocks that have been disappointed, and then they just continue to go lower. So I'm going to wait. until I
Okay.
see some strength, until I see a reason really to get in here, as opposed to being a hero and say, well, it's irrational to be down 39%, which it probably is, and it's going to bounce back eventually. Maybe, but it could leak before that as well. So I'm out on this one, not trying to catch a falling knife.
Dennis, give me your CFA analysis. Red Bull Max has it down 18 billion in market cap on a $25 million.
This is how the market works. This is Wall Street math. You miss by even like pennies. It doesn't matter. We knock you down billions. Sometimes you beat by pennies, and if your story is hot, you're up by billions. It's just the way it works. Or you could beat General Motors and beat by billions, and they punish you anyways just because you're General Motors. So Wall Street loves you or they hate you. You want to be in the former category, not the latter category. And right now, unfortunately for Dexcom shareholders, it has been pushed to the latter category.
Just real quick, if you traded POD in Select Corporation, PODD, that is on the getting a boost off this. That's another device for diabetes.
And you know what else they did, Joel? They came out and they, PODD, came out with their own guidance here. So they gave preliminary guidance here because they looked at what happened at Dexcom and they say, look, this isn't us. This isn't the same thing. We're actually doing pretty well. So they came in and defended themselves at 6 o'clock this morning. They said they see full year 2024 Omnipod revenue to be 18 to 21% from the previous 15 to 19. So they up guidance just by a smidgen. But that's like, oh, yeah, we're good to go. Because obviously, probably last night, PODD, I would imagine, was trained down sympathy.
It did. Oh, my God. We got dueling PR departments.
Yeah. And what else do we talk about in this show? When one goes down, the other likes to go up. It's not like it was pairs trading 101 back in the day when they go down. It's bad for all of them. No, this is the market in 2024. When they knock one down 38%, they'll buy the other one up to try to balance everything out. The markets just want to stay in balance. So PODD comes out, good on their PR departments, like, hey, we don't like seeing our stock down 15 points on something we didn't even do. Tell them we're doing okay. They came out, boom, obviously stocks trading higher on that.
Oh, wow. And that is your Dexcom pod coverage in detail, not found anywhere else on the internet. All right, AB, you're up next.
All right, let's go over to Decker's earnings real quick. I mean, yeah, this thing has just been an absolute monster. You look at the chart over the last year or so. Wow. Of course, Decker's is the well, actually, I mean, it's got a huge haircut over the past couple months. I didn't even know that, but the earnings this morning bringing it back up. This is, of course, the company behind the Hoka shoes that it seems like everyone is wearing, as well as Uggs, which Uggs, your man, Joel, Tom Brady.
Yeah, winter shoes that you can't wear in the snow. Okay, go ahead.
Yep. And he's a Michigan man, so he should know better than that. But Decker's reported EPS of $4.52. Beat the $3.48 estimate. Sales came in at $825 million. Beat the $808 million estimate. Let's see. The guidance was strong. 10% increase in net sales to $4.7 billion. You're raising guidance the opposite of what Dexcom did. Stock trading higher, up 12%.
It's a big move. It actually initially, believe it or not, dropped a little bit on this report. And then, the head fake, they always got to give you a head fake. Then they started ripping it and they could not stop ripping it all night. I mean, they're firing on all cylinders. The company's doing a lot of things well. And it was a big sell-off because we were in profit-taking mode for the last month and a half. And, we got up to 1,100, filled the gap all the way down. Now we pop back up. The one issue I'm going to say is it's not going to be as easy sledding as it was last time, where you're gapping up into new all-time highs, because now we have overhead supply. Everybody who bought this at $950, $1,000, like, please give my money back. Comes back to $1,000, I'll never buy a stock again. Come back to $1,100, I'll never buy a stock again. You have that issue. That's what overhead supply is. So it's not going to be as easy. It's a nice pop here. I'd be a seller to the pop.
This is not investment advice. If you own this stock, and you took the hurt on that move from 1,100, it had hit 836 in the pre-market, and you said, if this ever does a 50% retracement, ever, of course we don't have the information, that comes in at 965. I mean, if you see that today, I mean, that's just a great level. Not just a great level for today, but for tomorrow and moving forward. I mean, anybody that bought this thing in the month of July getting smoked, and here you are on 14,000 shares, Dennis. I don't know what it
It traded
traded
a little bit
last.
more last night, but yeah,
Yeah,
it's
I
not a
mean,
huge volume mover here.
yeah, I mean,
Some real volume could come in and knock it back down. We'll say this is still in price discovery mode. This is not like settled in. It's been trading there for
No.
8 hours and heavy volume. This could have movement at 9:30. This could have movement even off the PC.
Oh, it's going to have movement.
There's going to be more movement here yet. So, and again, I'm with you, Joel. I'm not chasing this up $100 on that tape, because this wasn't like one that was just like, boom, boom, going up, 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 up. It's been going down, down, down for 2 months. You have bag holder central in this stock from the last 2 months.
Where's the AI in Decker shoes? I mean,
there's no checking, DECK, no A, no I, no A in Deck.
Yeah. Yep. Next.
Well, so I wanted to go back real quick because Joel, what makes a Michigan man? I mean, a Michigan man. What do you have to do? Do you have to go to University of Michigan? Or is it once you're a Michigan man for always? Is Tom Brady still?
Okay. So how much do you want to bore people?
I just want to know the answer. I mean, we could do it real quick.
Well, do you know Do you know the true answer, AB?
I don't know the true answer. I don't know, so I'm asking.
Okay. All right. This is only going to be like a 5 or 10 minute story.
Okay. You opened a can of worms, AB.
You did. Okay. Back in 1989, Michigan had a coach.
Before AB was born.
Yeah.
I was just a young chap in
his name was Bill Frieder. Okay. And he had a team that was a pretty good team. Glenn Rice, Terry Mills, Ramil Robinson, Sean Higgins. I can't remember all their names. And they were like a 3 or 4 seed in the tournament. And before the tournament, Frieder took a job at Arizona State before the tournament started. Okay. And Bo Schembechler, do you know who Bo Schembechler is, Aaron?
Nope.
Oh my Lord.
All right, we need a spark notes here.
Do you don't know who Bo Schembechler? Dennis, we're gonna have to talk after the show.
We need the cliff notes.
I'm not participating in this conversation. The chat is losing their crap on you, so you gotta have to speed it up.
Oh, listen, you telling me to speed it up.
No, okay.
All right. So so Frieder, well, I can tell you a couple stories about him, but we'll save that. I saw him in an elevator.
This is all your fault, AB.
Okay. So Frieder's like, yeah, I'm going to Arizona State. I got a good deal, but I'm sticking around to coach Michigan in the 1989 tournament. Okay. Bo Schembechler, the AD, comes on and he says, you're fired. A Michigan man is going to coach a Michigan team. And he fired Bill Frieder.
Before the tournament?
Before the tournament.
There you go. All right. So
and do you know who won the 1989 tournament in NCAA?
Ohio State.
Guess again.
University of Michigan.
You got it. So a Michigan man is going to coach a Michigan team.
Who was
that's where it came from.
Who was the coach?
And that's a true story. Steve Fisher, who ended up getting fired because of the Fab Five. I know you heard about that because we were probably in diapers then.
All right, guys.
Okay.
All right, guys. I'm sorry. The chat's mad. The chat's mad.
That's a true story.
All right.
That's a true story.
That's
a good story.
That's a great
especially
story.
if you're from Michigan.
A Michigan man will coach a Michigan team. That's good to know. Let's move over.
Eric loves it. He's in the background.
Eric's laughing in the background. We got Eric Kroll going to be coming on in 15 minutes. Stick around here, folks. He's going to take us through this 8:30 number. But Eric's in the background. He's laughing out loud. So it was a good one.
Yeah. We usually don't get the Joel rant, but let's go from. I mean, we're going to go from a Michigan man to an Ohio company, Bristol Myers Squibb.
Bristol
Myers reported this morning, and the numbers, look great. So EPS came in at $2.07, beat the $1.63 estimate. Sales came in at $12.2 billion, beat the $11.54 billion estimate. Adjusted EPS forecast of 60 cents to 90 cents versus prior guidance of 40 cents to 70 cents. So, bumping up guidance there, the double beat, and the stock is trading higher by 5%, which doesn't sound like too much but for Bristol Myers, that's a decent little move.
Is this the cheapest drug stock in the world? I mean, this company just makes a pile of money. And it's like, this is but the market doesn't care about that. It wants growth. It wants a story. If they were to go buy a weight loss drug company, that's what Bristol Myers needs to do. Go buy VKTX, make everyone happy. And then you've got the weight loss drug and you're in there and you can go it. That's what they need to do. Bristol Myers, go buy VKTX, go buy Viking Therapeutics. And then you'll get these multiple expansion that Lilly and obviously, NVO has had. Nothing's had the multiple expansion like Lilly. But, you got Lilly trading 65 times earnings and Bristol Myers trading like 9 times earnings. Gotta be, some type of happy medium here one day. So I'm still long Bristol Myers. I bought more a week ago when I felt tech was going to roll over. I was like, well, where are they going to go? They're going to go into defense. So I made the case to buy more Bristol Myers. I tripled down, brought my average cost basis down to 43 because, I bought that thing up about 50. And, now I'm pretty happy that I did that. With that being said, this stock market just doesn't like companies that make money. They like stocks with a story. And Bristol Myers still doesn't have a great story. They need to find a weight loss drug. Go buy VKTX. Go do it. Now.
Okay. Did I tell you I was buried in 1989 too? And Michigan also won the Rose Bowl that year.
I think that's your best year of all time.
And just one more thing. You want to talk about a Michigan
right
man?
Back to Michigan. He ignores everything I said. It's like I wasn't done talking about Michigan.
Last thing. Dana is a 4th generation Michigan grad. 4th. Figure four. Me. Okay, her.
Figure it out, Joel.
Me, my dad, and my granddad. 4th generation. Okay, it's.
Wait, you know what else? You know what else happened in 1989?
No, nothing.
Nothing good because the Oilers lost to the LA Kings in the first round after the Gretzky trade, and I was bawling.
You know what the Oilers always do, lose in the first round?
Yeah, kind of.
What happened in 89? Hurry up.
I was going to see if that Taylor Swift was born. She has a whole album named after it. The biggest star in the world. So 1989.
Swifties.
Dennis, it's filling the gap here at 48.55. Okay, so I don't know if you have a piece, a quarter piece, a full piece. You're holding this until
I've got a full piece. No, I'm just holding the dang thing.
I look at 48.55 as a.
They're gonna go get in the weight. They're gonna come out with some type of weight loss drug. That's what they need to do, and then they're gonna get multiple expansion. That's what I want them to do. I don't know if they're gonna do it. And so value trap. Just be careful because I've been trapped in this one already. I don't know. Maybe I should just dump it and take the money and run. But I'm sticking with. I gotta have a little diversification for my Nvidia and my Tesla and my AMD roll over. At least I got a little bit of Bristol Myers helping out a little bit.
All right, let's take a break from earnings real quick. This is a good question in the chat from VD. Will Google be affected by OpenAI new search engine? So OpenAI announced Search GPT last night. And this was a thesis that when ChatGPT first came out, Dennis, I know we discussed a lot that Google was going to start losing market share. And this new product from OpenAI seems to be taking more direct aim at Google. However, my theory is that I think there's room for Google and ChatGPT. People use them for different things. I mean, Dennis, you've started using ChatGPT more, but I assume you're still using Google for most things. And for like a quick thing, if you want to find, say, movie times in your area, something like that. Like you're going to Google, you're not going to ChatGPT.
Agree. I do think, and there was a concern that as ChatGPT and these other chatbots get better, because right now they're not giving me a lot of the answers that I'm looking for. Sometimes they do, sometimes they don't. Google seems to always find me what I'm looking for. So I'm still a Google fan, and maybe I'm a creature of habit, so it's going to be harder to bring me over. But I mean, it is competition. There is definitely the competitive that, you can go and ChatGPT something, and you may not necessarily have to Google it. So that in itself scares me a bit. But then Google's working on their own chat bot. What's theirs called? They got something cooking. I forget what theirs is called.
Gemini.
Is it Gemini?
Yeah.
So they're working on theirs too, and they're pretty smart over at Google as well. So I think they'll figure it out. But I think that's also why you see Microsoft trading 35 times earnings and Google trading 21 times earnings. So there's a difference in multiples there. I think it's because competition is coming for that Google monopoly.
know nothing about that. All I know is there's major support at 165. So long term, short term, if you're taking a poke at it here at 170 and you know think it's going to be no big deal, you're leaning on this 165 area. That was after last earnings. You peaked, you came in, you put a quad bottom in. After that, boom, you got a big old gap to fill. So 165, that's your level. I haven't seen enough yet to try and call a retracement off this all-time high move. So that's what I'm looking at in the Googster. S&P is trading right near the highs of the pre-market session, so they're looking for a good PCE. Wall Street is, that
I
is.
think they are. I think
All
they
right,
want an
well-
excuse to buy IWM to new highs. So we're going to see what
Oh,
happens.
before I move, IWM, we have an 8-star level, and we're right there right now. Look at
Wow.
this upper right chart. You IWMers, you get out there and you keep an eye on this, because a break here, a clean break and a hold of 224. Boom, boom, boom. We see that high of the move coming in. Big level there. IWM for you. Put it up on my front screen for Dennis, so he won't yell at me when I talk about the S&Ps and the Qs.
Quickly, I have 2 minutes. I did make some moves because I don't know how quickly I'm going to get back on this. Obviously, this number's wild here, and we'll preview that in 1 minute. But I did make some moves in the long-term portfolio yesterday. I did 4 moves total. I bought more Tesla. It's not a secret. I feel like I'm just going to dollar cost into average into Tesla over the next year. Just keep buying more and more and more. Still the biggest position in my long-term portfolio. I'm trying to make it bigger because I believe in it long-term story in Tesla.
What you
I bought Dell.
You said 5% of your long term the other day. What would you
Probably
get it up to?
6.
Well, I'm saying
50,
what would be the
50,
the max?
I want to go to 50. 50. Half of it.
What would be the okay? 50 would be your max.
No, it's a
Margin.
joke. But I bet I want to go over 10. I want to go over 10 at least.
Margin
Margin enough. 200% of my long-term portfolio.
Yeah, margin.
No,
margin.
and I could, I'm always diversified, so I'll stay diversified. But it's around 5, and I added maybe 20. It probably is approaching 6% of my investable assets in my retirement.
I can't sleep at night, but that's okay.
Yeah, I don't sleep at night with 6% of my money in one stock. SMCI, I took a starter position in there. I'd been in there for a while. I bought it at 690 early in the morning, and then it was looking pretty bad when it got down to 670 or 666. Oh, at the 666 bottom. Did it bottom 666 yesterday?
Did it?
I think it did. I see a 660. No, 663.
Okay.
The market's
I just clicked on
That's
it.
a whole
Yeah.
nother story. That's
the S&P bottom 666. So we know when things get down to 666, they tend to bottom, just because the S&P did that back in 2008. And I have one. So I bought SMCI starter position, doubled down on Dell, bought more Tesla. Those 3, and I did sell VKTX. I'm not going to be out of this totally though, because I'm thinking if it's going to pull back, I think they're eventually going to have to do an offer. I don't think they're imminently getting bought here. So even though I want Bristol Myers to go buy them, I want them to wait until I rebuy this. I think I can get a shot back in the 50s. So I've sold it. Going to try to rebuy it probably back in the 50s.
That was a cash.
All right, 1 minute to the PCE number.
I'm going in the background, and we got Eric Kroll coming in, so stick around, folks. Eric is going to come in for us as well.
We're looking for 2.5% year-over-year PCE. We're looking for 0.2% in June PCE. That would be an increase from the 0.1% we got the month prior in May. Core PCE year-over-year is expected to stay flat at 2.6%. We are looking for the just normal PCE index in June to be 0.1%.
I'm nervous.
If you guys remember, you go back to May, that's when we got that 0.0 number for the PCE that the market loved. So now the bar is it's actually getting lowered a little bit because we are expected to see a little bit of growth in June for the PCE. But
I'm going to be so calm during this number.
Okay.
Because I'm not going to I'm not going to be an algo jumper.
It's 8:30 now.
Okay.
Okay. 8:30. Be calm.
Wow. Is it out?
Well,
Holy macro. Holy macro. Okay. All right. It looks a little bit light. It looks like a little bit light, maybe. In line. I say light in line. It doesn't look horrible. That's my guess looking at the price. Muted response.
PCE for June, 2.6% versus 2.5%. Estimated was 2.6 prior. So that was year over year. So it stayed flat there. PCE index month over month for June, 0.1% versus 0.1% estimated. That was in line. So it rose by 0.1% from May.
They like it.
USA PCE price index for June year over year, 2.5% versus 2.5%. estimated 2.6% prior. So that dropped 0.1% month over month, which was in line with estimates.
So far, the bulls have not flinched at all. Now, I say so far here, a little bit of a dip, but it didn't even take you out of the 54.80 handle. Your pop is 92.75, folks. Based on the price action from yesterday, you know there's nothing in there until yesterday's high. Let's just look at the TLT real quick. TLT up 34 cents. Here, I got to get the future. I got to get the different time frame in here for the TLT. TLT gets a little bit of a pop. The buyer's ahead of it, where they're selling a little bit, starting to see a little bit of a fade here. IWM, that was at that critical level. It spiked to over almost that 225, the high of the move, but now it's come back down. Kind of went both ways on that. We got the level here in the IWM. I think you're getting the reaction from the market is exactly what they gave you. A nothing muffin here. Inline numbers. What do you think, AB?
I think it's, again, like you don't want a drop in inflation that's too drastic because that's typically coupled with a slowdown in the economy. So you want to see this continue to kind of trickle lower and move toward that 2%. I think that's part of the reason of the overall sell-off in the market is that now that we're actually getting close to these rate cuts that everyone's been hoping for over a year, we're realizing why is the Fed cutting rates, and it's not because the inflation target is back.
Okay, we're starting to fall a little bit here. This was the low. I also like to check.
I was in the middle of making a good point there, Joel.
I'm sorry. Go ahead. I interrupted you. We never interrupt on this show. Go ahead.
I was going to say that the Fed, instead of cutting rates because we're at the 2% inflation target rate, is now cutting rates because it is more worried about slowdowns in the economy, the labor market weakening and stuff. So not all rate cuts are created equal. We talked about that before. So I mean, again, like would hate to see the inflation just plummet because again, that's typically associated with the big slowdown in the market. So I think just because we're getting to these rate cuts now, we're getting closer and closer, not necessarily the best thing in the world, but should still be good for equities overall.
I mean, I can't argue with anything that you're saying. I mean,
neither can Riley. Thank you, Riley. Spot on.
Yeah.
I think that's Riley Rasnick in the chat, by the way.
Maybe she might be at camp.
No, all right, let's go ahead and bring Eric Kroll on, hanging backstage. Let's see what he thinks about these numbers and what's going on in the IPO market. Mr. Kroll, welcome back to PreMarket Prep. How are you doing this morning?
I'm doing great. How about you guys?
It's a Friday. Can't complain.
Yeah.
We got some volatility back in the markets.
Oh, there has been an interesting week and a half, hasn't it? With the markets, the S&P and especially the NASDAQ getting hammered. But then you have the IWM rising very quickly. It's been lagging through 3.5 years and now starting to show some signs of life and holding firm. So it could be this rotation could continue for a while.
Okay, all right. We could talk about that a little bit. We got some inflation data. I mean, a real volatile week. We could talk about that in a little bit, but let's talk about the IPO market. Kind of a quiet year so far.
It has been, and in fact, the IPO market has been really soft since 2022, the beginning of 2022. The IPO market had a lot of IPOs in 2021. And as it's shown there in the slide on the left, you can see it had almost like a climax top in terms of both the dollars raised in the IPO market and the number of IPOs. There's 397 IPOs in 2021, and that doesn't include the 400 some odd SPACs that also ended up mostly being just terrible investments. And then you can see after 2021, when we had the bear market, how the IPO market got crushed, both in terms of the numbers of IPOs. It went down to 71, the lowest in like 10 to 12 years, and the money raised through IPOs. It came up a little bit in 2023 last year, and it's rising slightly ahead of last year. You can see the slide on the right where I'm showing quarterly numbers. You can see the numbers of IPOs is flattened to slightly rising, both in the number of IPOs and the dollars raised. So it's the frozen market is thawing a little bit, but it's still not great. We're not in like everybody's excited yet mode.
Yeah, you mentioned the specs there, so that's something that worth mentioning. You think? I mean, it hasn't hurt the banks, though, right? I mean, I don't know what percentages of the IPO market. Over the banks, there's probably some banks that dabble in there a little bit more. I guess things more interested for the banks on the interest rate and the economic activity. Okay, well, you have less. You think you might get some more liquidity, right? Because people want to get in on
Right.
the new stuff, but that doesn't seem to be the case.
Exactly. You would think with there's less IPOs coming out, the better ones will be coming out. But we always look at the measure of how much the stocks trades in dollar volume per day. And normally, and our past research showed that over a long period of time, 28% of IPOs traded over $20 million a day. And we call that the liquidity tell, because that also correlates well with the ones who do the best. And lately, since 2022 in January, only 13% of them trade over $20 million a day. So we're getting a lot of the lower quality stocks coming out to the public market. The institutional investors just don't have the appetite to trade the ones that have come out.
Okay. All right. I mean, you wanna see the volume, and that's another thing that you talked about with your life cycle. Maybe we can go with that at the end. The volume spurts. Are the big boys making a commitment? Are the institutions after the initial surge? So,
Yeah.
all right. Well, your top IPOs here. There's an interesting. We got some good ones on there. Let's talk about them. Let's talk about them moving forward.
Well, first, these are the only 18 that trade more than $20 million a day and are up more than 20% since they debuted. So there's not a lot of them, obviously. So they're just the ones that have come out. There's very few acting well. It's always hard to do biotechs. I don't really invest in biotech stocks. They're usually a story stock. They usually have no earnings. They have some sales. So I kind of ignore those. There's an interesting one at number 2, but please, no one go out there and buy this one. They have no sales and no earnings, but it's interesting to watch. It's nano-nuclear. They have portable nuclear power plants that can be moved around on a semi-trailer truck. It's a very interesting concept. It's one of those things where this could grow down the road. You can bring power someplace where they have major outages, or start power in places that don't have any, like say Africa or you name it. But it's an interesting company. Don't invest in it because I'm talking about it. But the ones I'm really watching are ARM Holdings. They're at number 4, Kava at number 7, and I'm also watching. Let me get my thing straight. Reddit, which is down there at number 18.
Wow. If you throw out the biotech ones, right, and you throw AB, did you ever talk to me about this nano energy, or was there another energy stock?
There was a different one. The one I was talking about, I might have gone public via SPAC a while ago, but is
Okay, that's not
it's a
it.
dirty word. No, this one, the one I was talking about was EOSE.
Okay. So I'm looking at this list of 18, and then you take out the biotechs. Then how many? Out of what? Well, out of how many IPOs do you have this?
We were looking at in the last 2.5 years. You're looking at I think it was like 300 IPOs. So there's just not that many doing well. But yeah, I mean, other ones on this list here, I'm watching Birkenstock, although it's come back a little bit. And Birkenstock and also ARM Holdings, they're not new companies. ARM Holdings was public before, then it went private, then it came back. Birkenstock has been around a long time. But I do find it interesting, this Viking Holdings, they're the Viking River Cruise company, and also GigaCloud. They've had some pretty good moves. So those are the ones I'm really paying attention to.
And if you flip this chart upside down, I'm going to go to your next chart. Nope, you don't have it. If you flip this upside down and you said the percentage loss from day one closing price, going back the same time and the same volume parameters, how many stocks would you have in it?
That's a great question. I'll have that for you the next time. I'll bet there's probably 50 to 75. It's a lot more.
Okay. All right. And then the final slide, and then AB. I'm going to have AB and Dennis ask some questions here. This is what you got your eye on here. Kava Group, restaurant. Talk to me about this charts.
Kava, you can see it had that initial run up. We call that the IPO advanced phase. And then it corrected and undercut the day one low, like 91% of all IPO stocks do. And then it formed this cup base, and then it broke out. We call that breakout above that old IPO advanced phase high, the institutional advanced phase, perfect marking there. And it's going on. It's an institutional advanced phase rise. That's the place you want to buy. It's been rising up until like the last 2 weeks. It's corrected pretty hard below the 50-day moving average in red. But it's holding in there pretty well. We'll see how it does today. ARM Holdings, it really is still in the IPO advanced phase. It had that little small cup base in the beginning a few weeks. It had the monster breakout, the monster correction that should have shaken out everybody, including me, and it did. But I got back in, and then it's had a great run from the 200-day moving average shown there in black. And it's corrected also like other chip stocks in the last 2 weeks, but it's helped. It seems to be right there at the 50-day moving average on yesterday's close. So that's a good sign. I say 50-day, but that's really the 10-week line on the weekly. And then Reddit, it's still in its IPO advanced phase. It too is above its 10-week line. These all have the right kind of chart patterns I'm looking at.
So are you waiting? A pause to build a base. Technically, what are you looking at here? Or you just kind of, said, are you willing to nibble here at the 50 and then, nibble at the 200 if it gets there? How do you look at these technically?
On Reddit, I'm especially waiting for a little bit of a pause, a little bit of a base. I like to see it firm up in terms of price stability. It's pretty volatile right now with its moves. ARM Holdings, I'm actually in it. That one, and also in Kava, I'm also in that one. I bought those earlier, and I have enough cushion that I can hold. But I have to tell you, you have brought up painful memories for me today. 1989, your Michigan Wolverines beat my Fighting Illini. They were Final Four. Illinois beat them twice in the regular season. They lose in the Final Four on a putback rebound because Nick Anderson didn't get off his feet to make the
rebound. Didn't box out Sean Higgins.
He didn't.
He didn't box him out. That was the easiest box out ever. And he just was a boom. They beat him twice. Efren Winters was on that team.
You got
Nick Anderson. Yeah. And who was it? The big sturdy guy, too. He was a forward. I'm trying to think of his name. Good old Lou Henson was the coach.
The comb over. And Efren Winters, I think, was on that team. And you're looking at Steve Fisher, rosy cheek Steve Fisher brings them to the championship. In only 7 games of coaching, they go 7-0. You're painful memories. I can't stand it.
I didn't know you.
I can't stand it.
I didn't know you went to
the
Illinois.
Worst when he brings up and then it's your team that they beat. That's the worst thing.
Jennifer Schultz
is coming on and it's his team.
Lowell Hamilton. Jennifer Schultz and Deion Thomas. We have some spot unless they're Googling it. Yeah, unless they're Googling it. Okay, you guys run the show with them.
So, go ahead. Eric, I'm curious about, how do the expected rate cuts impact the IPO market? Do you think that will encourage more companies to go public? We recently, heard about the Israeli cybersecurity company Wiz bombed, they turned down Google's deal in favor of going IPO. I feel like a couple of years ago, you get a $29 billion bid for a company that's 5 years old. You take that. Now they're looking at IPO. I'm trying to think of some other one. The Skims, which is Kim Kardashian backed apparel company, is eyeing an IPO. Do you think they're waiting for these rate cuts to come?
I do think that's part of it. I think they're waiting for the market to get a little bit past this frothy stage on AI and then move more into it's nice to see the IWM moving up. That means more companies, especially the smaller mid caps. And most IPOs are not big caps like ARM. Most of them are smaller. So I think when that starts to free up, I think that'll happen. But the other thing is there aren't many big names out there. Like how many companies can we think of? You mentioned Kim Kardashian's company. You mentioned Wiz. There aren't too many out there that people are just waiting for. It's not like in the past where, we're really waiting for Facebook. We're really waiting for CrowdStrike. If you think about how many big name private companies of large capitalization are out there, there's not that many.
Musk should take SpaceX.
That would be a big one.
Ooh,
that would be.
I would buy that. I would buy
Chick-fil-A.
That's a good one. Another one.
I still have never ate there. Is it good?
It's solid. I mean, you like
I
chicken,
mean,
chicken sandwich.
if you want a dry chicken sandwich, it's good.
Oh, he doesn't like it.
Joel,
Joel.
what chains do you like? You don't like Chipotle. You don't like Chick-fil-A.
Joel likes home
You
cooking.
don't like McDonald's.
Do you like kava?
Before we let you go, there's a new one out here, and I see this company. I go to downtown Birmingham, Michigan, and I see this company, and I'm like, wow, this is a really, a really sharp building, and boom, OneStream. Now I know there's 2 days worth of data, but walk us through here. Yep, you got my screen back up here. I was slow doing that. Do you know anything about this company? Has this come across your radar?
No, it hasn't. I will start watching it now, but you know us, we say never buy day one. They always will undercut the day one low, or I should say not always, but 91% eventually do that.
Wow.
So the goal is
That's
to you wait a little bit, you pause, you see it form a base, and then especially if it undercuts the day one low and starts to form a little bottom and come up, then you buy it when it gets above the prior high. But I would watch this. I don't know anything about it, so I'd have to take a look at it and what they do and what their sales growth is.
Okay. All right. So you guys got anything for Eric?
Just we're obviously looking in this market where we are in a little bit of a corrective phase here. Typically, you obviously study the IPOs. Do these typically correct more than the overall market because obviously the newer companies, is there more volatility here? So do we expect stocks like Reddit, Kava, or these recent ones to correct more just because they're newer and maybe there's still more price discovery there? Just what are the stats like, just looking at IPOs and volatility?
They are more volatile in general. So I do expect them to have bigger corrections and also sometimes faster rises on the way back up. No question about it. That's how they act. They have more volatility. And the other thing I'm looking at here in terms of the market, I call it the back to school sale. This time of year, almost always from mid-July to sometime end of August, there's always a correction. You can look it up on charts. They go back to the 50-day moving average or below it all the time. I don't know why. My personal theory is these people don't pay with college out of their checking accounts. They take big money out of stocks and maybe mutual funds, because if you're going to pay $50,000 to $75,000 a year for college and you got to start paying tuition at this time of year, where does that money come from? I think people sell stocks.
There you go.
All right. Well, Eric Kroll, always a pleasure to have you on Pre-Market Prep again from Krull Asset Management, the life cycle trade. Eric, I didn't know you went to Illinois. We'll have to put a little friendly wager on the bragging rights game this year. I went to University of Missouri. So
that's always a good game.
Always a fun game there. So yeah, I mean, good luck with the football season here. Seems like you guys are kind of on the upswing the past few years there, and obviously the basketball is always a good program there. Eric, enjoy the rest of your Friday. We'll chat soon.
Thank you very much. It's always great to be here, except when you bring up painful memories.
Yeah, 1989. No more 1989.
One more thing, 1980, and I don't know if you want to stick around for this, Eric, or not. So Michigan and Seton Hall were in the final, okay, and I was on the floor back then, and there was a pool there were two exchanges, the Merck and the Chicago Board of Trade, right, and I was the only one that had Michigan winning. Okay.
Oh.
And no one else had Seton Hall. All right. So what they do is it would have been a tie, right? If Seton Hall would have won, then it would have been an exact tie. So you pick in the scores, right? So I think I had like 155. And so if it was under 155, even if Michigan lost, I won. The game goes to overtime. Okay. And basically, if what was the guy's name? John Morton. If he would have hit that shot, that final shot, he had a 3-pointer, I would have lost. Michigan would have lost. I would have been devastated. And I think between the two floors, I think there was like $4,000 or $5,000. And this was back in 1989. And a guy missed that shot. I almost had a heart attack. I'll never forget that. So, okay, Eric, you no more Michigan tangents. That's it. Okay, thanks, Eric.
Michigan. We'll never talk Michigan again on this show.
All right.
Over. Eric, thank you so much.
Oh, you're welcome. Fun to be here.
We're fading, Dennis. A little bit of a fade.
The show or the market?
The show is definitely fading off of all this Michigan talk. We're going to bring it back in, ban Michigan talking on this show. Joel quit. Joel would be done with the show. Yeah, we're leaking a little bit here. It has been a broad-based rally where, I mean, like cats and dogs living happily together, because we got the IWM obviously moving higher with the S&Ps, with the Qs, everything moving higher today. So a broad-based rally. That is still intact. We still have a broad-based rally. And like I was saying, I think we got a little bit overdone on some of this AI sell-off. You know, I was talking about it on the show yesterday, and you knew I was leaning towards the buy side if you were listening to yesterday morning's show. And we continue to leak, you know, a little bit after that, but we're kind of bouncing. You know, I pointed out Micron as well. I mean, you're looking at a stock that was $157. And you know, you're talking about 105 yesterday. So just a quiet little 35% fall. I mean, these are not nothing falls. These are significant falls. Qualcomm looks the same. I own QCOM in the long-term portfolio. Everybody chasing up at 230. Well, nobody wants it down at 175. I mean, you're coming into where some of these stocks, and it's why I took a position in Dell too. Dell trading now 16 times earnings at 25 times earnings, maybe getting a little bit overdone at 28 times earnings when it was up at 179, way overdone. Coming back in, I mean, is Dell still, you know, not going to benefit from AI? I think it does. So I think there's a spot where you can start, you know, just, you know, nibbling in, getting a little bit more positioned in, maybe some stuff you sold in the last month or two, maybe getting back into it like SMCI. You know, I sold SMCI over 900, you know, and I'm rebuying some of those shares that I sold. I sold some earlier than that too. But, you know, just kind of nibbling back in. You know, tipping toe, making sure, you know, I don't want to get my, you know, the shark come up and bite my foot off. So I'm just nibbling my toes. I don't mind losing my toes.
You got a reference point in these, right? I mean, I
Good.
know it's
I
only
like that.
one day of lows, but you can look at all these stocks. Same thing for the S&Ps. I mean, you got to look at, you know, that low from yesterday, and we were asked on the show yesterday, is a correction over? I'd like to see a couple quiet days, you know, just quiet. You know, we don't have to necessarily bolt back up to 55.20, but now I think you have people thinking, oh, well, I might have missed the bottom. I might have missed a short-term bottom here. I got to get my bids out here a little bit earlier. Because you talked about, I don't know what day you said it was like Tuesday or Wednesday. You were just like, it's kind of like buyer exhaustion, you know, like people weren't out there. Now you take what, you know, 50, 60 points off some of these stocks, and, you know, maybe
Still
it's
more
not.
buyer exhaustion here. There'd be seller exhaustion. Like at what
Yeah.
point, and you look at AMD, at what point, you know, this is a violent sell-off in AMD. You know, if you're betting that Lisa Su, you know, is leaving the company and it's over, but I think Lisa Su's not going anywhere. That's a joke. So I'm not starting any rumors
Boy.
here today. But $187. 1, 2, 3, 4, 5, 6, 7, 8, 9 days ago. This was a $185 stock 9 days ago, 9 trading days ago. It got down to 136. That is a violent sell-off, folks.
That's
That isn't just a
crazy.
little correction. That's a violent sell-off. So is there some technical damage? Absolutely. Is it going to take some work to get back up there? Absolutely. Do we have a technical bounce in store for some of these things? I think we do eventually. I mean, it is trying to catch the falling knife at this point in time. That's why I don't go all in and say, yeah, that's the bottom. I'm going to be the hero. But I do think that if you're underinvested and you've missed this AI rally the whole time, there's a certain point in time to start nibbling in. And I think that time is now. Certain stocks.
All right, let's see. We did miss a few earnings reports.
Yeah,
Let's
one
see.
that I got poo-pooed on yesterday, and I thought it
Triple
looked
M?
good. Yeah, Triple M.
Well,
Yep.
you did triple N there. We want M there. Let's go to Triple M here, of course, which has been bogged down for the last few years by these lawsuit concerns. Now starting to perk up a little bit. We know the valuation is pretty cheap, pretty inexpensive there. EPS came in at $1.93, beat by a quarter, 25 cents. Revenue of $6 billion, beat by $170 million. Raises guidance to $7.30 from $6.80 to $7.30 versus the $7.17 estimate. So that outlook raise, the double beat. You know, I mean, it's I think a little bit easier to try to push some of that bad news to the back burner when you're reporting great numbers like Triple M did this morning. And they reported, I don't know if we got the historical data on this, in the midst of the 3M golf tournament in Minnesota. So that's ongoing right now. The golf tournament, the PGA tournament that the company sponsors. So it's a big week for Triple M here.
It's a big breakout through that 105. There was a wall of resistance at 105, and it's important that it holds that, because when you're playing a breakout, if you're playing a breakout on earnings, stocks are breakouts only if they hold the breakouts. So you do not want to see this get back down below 105 anytime soon. Maybe it's going to hold, maybe it's going to run, but if you're playing it for the breakout, you want to see that 105 absolutely hold. I know we're up at 109 in the pre-market, so I know it's a ways away, but we've seen reversals and violent ones in this market in the past. So just saying that's your technical level. 105 to 106 is a critical level. So if it does start to leak, you don't want to see it breach those levels.
You took the words exactly out of my mouth here, that 105. I will say, like, the last 97 times that Triple M has popped off, whether it's earnings or anything, it has faded. It's faded a lot, and people have been quick to take their profits. This is a big move. This move is, I'm sure, over. Well, maybe not. I'm not sure what the expected move is. But if you have a short-term target today, that would be 111.11. But I think longer term, I think based on its historical price patterns, I think this kind of leaks a little bit and gets you a chance to get in closer to that 105, 106 area for Triple M.
There you go. Looks like, let's see. Did we ever do, we should do Colgate, Palmolive, Colgate,
Oh,
Palmolive?
sure, we can do Colgate. I mean, boring consumer staple. Consumer staples came back into favor for a couple days there, just for the simple reason. And you know what? Give them their due. Consumer staples have actually been running here for a while. You know, if we're just looking out, it hasn't been that bad of a time to be in consumer staples. Some of them really beat up. Colgate, not one of them. It's been a pretty good few months. It's funny how you see separation between like Colgate, some of these, like Procter & Gamble's been good too. And then, you know, you get the food stocks though, but they've been, you know, the opposite. The food stocks have not done as well. General Mills, Conagra has been a little bit weaker. Maybe, you know, it's inflation. Maybe margins are compressed there a little bit. Maybe, I don't know if anything can pass on the other ones. I'm not sure. I never looked at that detail. But Colgate, fine report. Okay. Stocks trading higher, but you got a huge number. Psychological 100. You know, these levels just work. It's run back, you know, a year ago, 70 to 100. That's not nothing. That's something. I mean, I'm looking at that bottom chart. This is a big move for consumer staple. Like, look at the bottom right chart. And look where your consumer staples typically just hang out. They don't do a hell of a lot. They protect your capital in downtimes, and they just, you know, are cash cows. This is like a 30-point move in Colgate here in the last year. And I don't know if all of a sudden CL's got an AI plan or something, but this does feel like this is an overdone move. Maybe this is the breakout and this is the future of the stock. What's the PE on this puppy?
The PE is, forward PE is 27.5.
Yeah. Do you want to go pay 27.5 times earnings
for toothpaste?
For toothpaste? No, I don't. And I think all this move was multiple expansion here. So, you know, not poo-pooing the earnings, not saying anything bad. I didn't even read the earnings report. I'm just saying you've had you've had a move in the last year, which is not characteristic of this stock. And I think it's time to take profits.
Oh, man, you guys are going to kill me. I just found a video here from
another Michigan story.
You go back to 1989.
Yes, I am. I hope I don't get in trouble for this. Do you remember? Let's see if I can skip the ad. I don't know. Will you be able to hear this? Remember that Madge? She's the beautician, and that lady's dip. Can you guys see that?
Yeah, I'm looking at it. Yeah, we see it.
Yeah, it's
Palmolive.
Yeah, Colgate Palmolive. That's what she's dipping in. It does so. You guys remember that?
The 80s were a good time. Not 1989, though. That was a bad year for me, too. So 88 was good. Oilers won the cup. 87 was good. Oilers won the cup. 86 wasn't good. The Oilers scored in their own net to not win the cup. So that's
everything. This is either it's either
sports
or Oilers.
There's only two things worth talking about on a live podcast: stocks and sports. You know, that's why the Stocks and Jocks show. That's what we like talking here too.
Well, it is 9 a.m. That'll wrap up pre-market prep for the week. Fun way to end the show today. We, I know that, I enjoyed the tangents. I enjoyed learning more about the, now I never have to ask again, what does a Michigan man mean? Where did that come from? I'll always know for the rest of my life. So,
ask Raz if he knows. Ask Raz. He should know.
All right.
Yes.
What final thoughts for the day, guys?
Mm.
Oh
Boy,
man, I
boy.
think you're gonna see. I think this rally is gonna hold. One, we're oversold. Two, we didn't get anything, but I do think there's gonna be dips to buy. So I think I'm still got my buy in the dip shoes on. Not going all in, but just like nibbling into a couple AI stocks. Not so much chasing IWM, but just have your shopping list. Nibble into a few stocks. I think the pain that we saw in the last week or two, I think it subsides for a little bit here. I don't think it's maybe not over, but I don't think we're just going to give this back and just crash today. And maybe I'm wrong. Maybe that's exactly what's going to happen. There's going to be a point in time today, though, where it looks like we're probably going to give some of it back because we had 100 points up, 100 points down yesterday. That's not just going away. So there's going to be a critical moment here where you're like, oh my gosh, we're going to give this back. I think that's where you strike, though. I think we kind of try to give it back, and then I think you actually start to buy some stocks.
I want
to dip today. We get a dip.
I'm calling for an inside day. We're 50 handles away from
Good call.
each
Safe
of them.
call.
But I'd like to see some of this like early June action here, even though it was a little bit opposite. You broke out, you broke down, then you just a couple quiet days, just bored everyone to sleep, right? And then you took off again, and then at the end of June, let's board people. We're going nowhere. Boom. And now they're moved higher. And then consolidated like 5,700, 4 or 5 days. Oh, we're just ramping up to go to 6,000. And then boom, we go down to 54.30. So I'd like to see a couple quiet days here, get some good earnings reports and turn up. So I'm going to agree with you this one, Dennis. Important day for the market. Just holding in there. It doesn't have to end up 40 handles, but hold on to majority of these gains, and I think that'd be a decent way to end the week. But as you know, in this market, man, just don't, be careful on your opinions because there's just been some wicked price action. And then Mies Schneider coming on Monday, and she'll be talking about the Modern Family. So that will be fun.
All right, guys. Well, again, thank you for tuning in this week. Please smash the like if you haven't already. We do have live trading starting up after this, and we will see you guys Monday morning. Again, Mies Schneider, 8:35. Got to be there. We'll see you guys then.